billions have been spent bailing out the big bad banks, but is small better? Well, INSEAD professor John Dermeen has been actually researching the subject, and you've written a book on the subject as well, which we'll get to in a minute. But first, let me ask you, how did we get into the position of having to bail out all these banks that are too big to fail?
There was a massive bubble on the real estate market, whether it's in the US, the UK, Spain, Australia. I mean, price of real estate went to the roof. And therefore, that's nothing new. I mean, we have had bubble on the real estate market in the past. Two was a very large phenomenon of securitization. That was new techniques where banks were selling credit to the market. But securitization were very poorly done. And therefore, in July 2007, when the banks had to take back on balance sheet all these loans, the market started to be scared about the solvency of banks. And therefore, in many of these countries, over the last 10 years, we have had many bank mergers. Therefore, it was felt in many countries that they could simply not let a bank go into default. And therefore, the view taken around the world that banks had to be bailed out at a huge cost we have seen.
What about Lehman Brothers being allowed to fail?
There was always this idea that one day we must teach the market a lesson. Okay, we must put a bank into default so that the market will be much more careful in lending to banks. So in the US, you first have in March 2008 the case of Bear Stearns running into difficulties.
Over the weekend, it
Yes.
seems.
And then in the case of Bear Stearns, the Federal Reserve was concerned as to what will happen with a default of Bear Stearns. And the Federal Reserve helped JP Morgan to take over Bear Stearns. Then a few months go by, and we reach September 2008. Now, again, a second investment bank ran into difficulties, Lehman. At that time, the Federal Reserve took a judgment that now putting Lehman into default would not create major risk for the financial institutions. And from that perspective, they were right, because Lehman went into default. And I am not aware of any large banks that they suffered massive losses because of the default of Lehman.
Oh, but they certainly were scared.
But then what happened is that when Lehman was put into default, the market got scarce. Who is going to be next? Because everybody knew that Merrill Lynch was facing similar problem. So there started to be a huge uncertainty. If Lehman is put into default, are we going to see other major institutions going into default? And there was then this massive collapse of confidence, and banks simply refusing to lend to one another. Okay, there was this huge liquidity crisis. That was really the start of the banking crisis.
So if a bank is too big to fail, is it in fact too big, to quote one finance minister, or is small better?
So there are two arguments why there may be a problem of having smaller banks. One is first the question about economies of scale. If you want to be active in banking, in servicing corporate clients, you must have a large international bank. Take a country like Holland with large corporate like Unilever, like the Shell company. Well, if a Dutch bank wants to service Shell, Unilever, okay, they must have presence around the world. The second major argument is that if you cap the size of banks, there is a danger that they will not be diversified properly. Again, an extremely good example is what has happened in Spain. If you look at the Spanish cajas, the savings banks, which are essentially domestic, where they suffered massively from the real estate crisis in Spain, okay, many of the Spanish savings banks are close to default. You compare this to Banco Santander. Santander, of course, very large in Spain, but active in the UK, in the US, in Latin America. Santander has done much better to the crisis because they were diversified. The point is, number one, that in our service economy, whether it's in Europe, the US, banks provide a lot of highly skilled jobs, and therefore we believe it would be a wrong policy to reduce the size of these banks.
So you're not that concerned about the ratio of the bank to GDP, because obviously Switzerland has a small GDP, but Credit Suisse is a big bank. Bank of America is a big bank, but the US GDP is a lot bigger than Switzerland. So what's that ratio?
So in this research we have done with Professor Schoonmaker of Amsterdam, we precisely look at this. That is, those countries that have large banks, is it the case that they've had much bigger bailout costs? or those countries that had smaller banks, is it the case that they were facing a smaller bailout cost? I mean, just to give you an idea of numbers, in Switzerland, the equity of just Credit Suisse was about 11% of the Swiss GDP. In Great Britain, the equity of Royal Bank of Scotland was 5% of GDP. If you compare that to America, the equity of Citigroup was only 0.8% of GDP. Now, of course, not that Citigroup is a small bank, it's simply that Citigroup is a small bank compared to the size of US GDP. Now, when we look at the data, and that is very interesting, we see that some countries that have relatively small banks also have had to face very, very large bailing out costs. Okay? An example is Greece, but also the US. And the reason is very simple, is that if many small banks are affected at the same time, okay, the bailout cost can be very, very large. So the point of this study is to say it is not because you have smaller banks that you are going to face smaller bailout cost. Therefore, the argument was to say that those countries like Switzerland, like Germany, Holland, Belgium, where recently finance ministers have called for having smaller banks. We don't believe this is the panacea, that this is going to reduce the size of the problem. So in our opinion, capping the size of banks is not the solution. Improving regulation, it is very important. The first proposal would be to make banking supervision totally independent from politics. What is being discussed today, and it is very interesting, is the first time, to my knowledge, in both the US and the UK proposal, is that they would like to change bankruptcy rules or to a special bankruptcy law for banks to be able to put them into default over a weekend and to force a conversion of debt into shares. So technically, it would be possible over 2 days, put a bank into default, reopen the bank in the next Monday morning by increasing substantially the equity.
So what lessons have we learned from this crisis?
In my opinion, what we read in the public debate, okay, it is a lot of criticism about greed, about traders. So there's a lot of talk about capping bonuses, okay, and capping remuneration. Personally, I have great doubt that this is going to be enough to prevent future crises. But a major outcome of the crisis is that some of the banks are even much bigger today. Take the case in America. Bank of America has merged with Merrill Lynch. They bought Countrywide. They are much bigger.
I think they were forced into taking those.
They're even much bigger to fail. In Great Britain, Lloyds TSB has merged with HBOS. Again, they are coming out of the crisis much bigger. In France, BNP Paribas has purchased Fortis of Belgium. They are coming out. So we are coming out of the crisis with even much bigger institutions. I think the belief that regulators will be so much better tomorrow to regulate these financial institutions, I don't believe this is going to be the case.
Do you cover this in your book that's coming out? Is it Bank Valuation and Value-Based Management, McGraw-Hill? It's coming out. Do you cover this in your book?
No, the book is not directly related to the crisis. The book covered the last 25 years of my research on bank management, but the book is about how to price much better risk in a bank, how to price much better credit risk, how to price much better liquidity risk. So we believe that there are many ways where banks could be better managed in managing risk, and therefore indirectly that would lead to fewer bank defaults.
You're not alone in that belief, I'm sure.
Yeah.
Thank you very much, Jean-Germain, for being with us.
Thank you.